All right, everyone. Happy Friday. We'll see what the market brings to us today. I want to do commentary in this video on the next 2 weeks that we have up ahead. I want to take a look at the economic calendar and provide some commentary. We're going to even look a little bit farther down the road to see what could potentially be coming our way in light of the other information that I have. And if you guys want to see more of my analyses, my buys, sells, technicals, you guys can find them over at the Discord. Links in the description, 50% off your first month when you sign up for the earner tier. So we'll get into that. In the meantime, we'll just get right into what we see on the Qs right now, and then we'll get into that calendar to see what exactly is coming our way. And you guys can see, I mentioned this yesterday in my video, that selling pressure, we want to hold on to 513.15, I think is the change on that. That's the number. That's our 38.2. From the last climb that we had, the last major move that we got from October 22 lows all the way up until the most recent highs that we've had for the Qs, which go all the way up into, it looks like February the 19th. So we have a gap to fill down here. If we lose at the 513.15, we might just fill that gap, or at least a partial fill, maybe down to the 20-day that's on here. And the next 2 weeks could decide if we fill this gap sometime soon, or if it's something that, well, we wait a little bit longer and then we blow out this peak out of the water here that we most recently had, and we get to start that march towards those all-time highs. If we're going to sit on top and march towards all-time highs, you guys can see it right here at the tops of these, along this line along here, 521.17, sitting on top of that with some good momentum, which actually we had some momentum cooling on the daily chart. Weekly RSI is great. Monthly RSI is great. We have that shot at the all-time highs. It's still a potential, especially given the next 2 weeks that we have. It's just going to be super volatile because we have a lot of big news coming out our way. With the SPY, what are we looking at here? Well, we actually happened to lose the 588 number. Let me pop these up here for you. 587 was the 38.2 that we were looking at, which we almost retested yesterday. And then we'll see if we get this gap fill for similar reasons to what we would have gotten for the Qs. NVIDIA earnings happened, by the way, in the after hours on Wednesday the 28th. That can also be a big catalyst for us, especially the Qs, but it could also move the SPY as well. IWM already at its 20-day. We'll see if it pulls back to its 50. If it loses its 20 and gets down below that, then we have to fight from below the mean of 20 days moving average, the simple moving average, instead of up above it. Right now, this is wonderful support to see. Up here at 209.27, that's the number to sit on top of for IWM. So I now want to take a look at the calendar of events that's coming up our way. I'm going to put up trading economics here for you. There we go. And we can start to see what things are in the near future for us. So we have new home sales today. So that's going to be a little bit impactful for what we have. As long as it comes near consensus, that means that it's something that's already priced in because it's already expected. So as long as it doesn't come in super sour, then we're in good shape. If we look ahead to Tuesday of next week, which by the way, this Sunday, Jerome Powell speech, I don't think that's a big thing to pay attention to. I think it's a baccalaureate speech or something like that at Princeton. He's not going to say anything during that time. And well, like I said, I don't expect anything from that. On Tuesday, durable goods going to tell us a bit of what we would need to know in terms of GDP for Q2. Looking forward to that. And then moving on from there, Wednesday, the Fed minutes. This is one of the first major things that we have, the Fed minutes, to see what they talked about at their last meeting. They get released at 2 p.m. on Wednesday, and then we roll right into Thursday with GDP, and we're getting our second estimate for Q1. What we got the last time for Q1, and I don't know why it doesn't list it here. There it is. Consensus before was at negative 0.3%. If that gets revised up from negative 0.3 into the positive, the market's going to love that sort of revision. If instead it gets revised downward, the market might not like that so much, but I think the bigger thing is looking at Atlanta Fed GDP now, which currently is still signaling between 2 and 3%. As a matter of fact, if we scroll up a little bit, it'll tell us that 2.4% down from 2.5%. And this is developing all the time. We get another major update for personal income and outlays that happened on Friday, May 30th. So that's coming up for us next week. And that's when we get the inflation numbers as well for core PCE, personal income and outlays, or the personal income, personal spending. And we also get more insight on the balance of trade to see if that's come back the other way. Now, mind you, if we're less net imports, that we're leaning more towards the export side of things, that they start to balance out a little bit more, that can be less of a GDP drag as well. And so we're watching for that. So that's just this week coming up. Huge for GDP and huge for inflation numbers that we have, plus the Fed also coming out with their minutes. all that stuff's going to be major for us, including NVIDIA earnings, like I said, on the 28th in the after hours. I'll be providing further coverage for that in my future videos. Monday, ISM manufacturing, that's going to be telling for us below 50 is contractionary. So depending on what we see from GDP, if GDP scares us into recession, then ISM is going to be, which, mind you, I don't think that it will, but if it does, again, Atlanta Fed, I think, is the bigger of the two things. Watch for that one. ISM manufacturing staying near 50 or above is going to be great for us. Falling sharply below 50 is where that trouble is going to come in. On Tuesday, JOLTS, here's the next big one that we have. We're watching that labor market. And the thing is, as long as we go status quo in the labor market, not a big deal. We're near this number that we had last time. Not a big deal. We start to get a sharp fall off, I think like around 6.8 million or below. That's when we're going to start getting a little bit scared for what could potentially be coming our way in terms of, hey, maybe a recession still is there. Maybe we are seeing that weakness coming in. Inflation, prices aren't inflating, which means that companies are losing pricing power, which means now they have to cut people, which now people can't buy as much. That's going to fuel that recession narrative. That's what you need to be aware of. If instead we see more JOLTS job opening and that we don't really see further evidence of recessionary pressures, that the market goes, oh, hey, we're good. That's going to be levity in the market. So I don't want to sound, because I keep on mentioning the word recession. I'm trying to scare or make it sound like I'm overly bearish. Matter of fact, what I'm trying to say is, as long as we don't see evidence for recession, further evidence for recession in these reports, if instead it gives us reasons to be hopeful or that nothing's changed, we're probably going to head back in the bullish direction. We probably still have that trajectory for all-time highs, and then it's up to the technicals in the charts to tell the rest of that story. So still getting over my cold, by the way. Got my coffee here. I'm probably going to be sipping on it in a little bit. So in any case, as long as we're leaning away from recession, as long as we don't spell that out with the reports that are coming, if we don't get reasons to believe that possibly could be coming our way, if that doesn't creep back into our minds, then we're in good shape. We keep on going the way that we're going, and it's back to revisiting all-time highs with the Qs and with SPY, hopefully getting IWM back up to that 200-day to put it finally back into at least retesting bullish territory, as it's been below the 200-day for quite a while now for those Russell 2000 stocks. So big stuff coming up for us June 4th. Let me see, I already covered all that stuff. Non-farm payrolls, 130,000 is the trading economics forecast versus the 177 that we had previously. So we want to watch and see if we get weakness with non-farm payrolls. That's not going to be great for us. Unemployment rate, 4.2%. Great, wonderful. That's really going to help out the market, at least leading into a bullish direction. When we start to get to 4.3, maybe not so bad. But if we jump straight to 4.4 or higher, once again, that ties back in with that whole resurgence of that recession narrative. Like, it's going to at least cause some pause or hesitation to happen. And it's never just any one thing. It's going to be nuanced. We're going to have to put this all together, and I'll keep on providing those updates. So make sure you subscribe to this channel so you can see those updates as they come out. So, by the way, something we want to look forward to farther down the road as we get closer to the dates on the calendar, have July 9th on the calendar for the reciprocal tariffs that have been suspended, and it's August 14th for U.S.-China de-escalation is what we're hoping for that. So those two dates, as we draw close to July 9th, if there's a drawdown in the market, well, we could probably be worried about, maybe that is going to mess us up all over again. And now, mind you, news builds up for the tariff stuff all the time. So if we hear better news between now and then of more deals being made, more reasons to believe that it's not going to be so inflationary, more reasons to believe that free trade or leaning towards free trade is coming our way, all that stuff's going to be bullish. And further deal making between US and China that de-escalates things there as well is also going to be great. If we don't have any of that, or if we have a further escalation of tensions, then that puts even further downward pressure on the markets with these dates. So expect that nuance to happen. By the way, Fed meetings coming up for us middle of June, about June 18th is when we have the next meeting conclusion coming for us. Not expected to see cuts. As a matter of fact, July 30th, I don't know that we're going to see cuts there either. Right now, about a quarter of a chance, about a 25% chance, a little bit over when you combine the two bars that are here. Most likely we're going to be where we're at. I think really September, October, and the bond market agrees with that, is where we potentially see those cuts coming for us, and we'll know better after we get past that August 14th date. So we absolutely want to be watching for those dates as they come along. And guys, I put out other analyses, like ones that I can write out, spell out for you, and really articulate fully in text-based fashion over at the Discord, along with my technicals, along with my buys and sells. Me and there's a team of panel experts over there. Besides myself, Stockmo is over there as well. He's a personal friend of mine. It's how I got into it in the first place. And I'll tell you what, like that community with all those people supporting you towards financial freedom, towards building alpha in your portfolios through the trades that we share, through the analyses that we put out, through the conversations that we have each day with the community members, thousands of community members over there already. You guys can try it out for under $1 a day by using the link down in the description for the Discord. Make sure you use code word doctor when you sign up, because that's going to get you that 50% off your first month. Try it out. See what you think. I think you're going to find out that you like what you see, that there's going to be tons of value beyond what's already over there, that it's a far discounted price, even at its full price over what other people charge for far less value. So guys, the value, like I said, top-notch community, top-notch. The expert panelists over there, Stockmo, top-notch. Also, Stockmo Academy down in the description. He and Mrs. Mo have put together some coursework that's absolutely incredible for learning about trading options, learning about using technicals to trade using the bread recipe, which I personally use, especially in my, I should say exclusively in my intraday trades when I'm setting up my trade positions there, because it shows me when those big moves are likely coming, whether it's up or down. And using options, I'm able to really capitalize on those moments. And that's what allows me to build the alpha in my own portfolio and get the outsized gains beyond what the market can return using the bread recipe and using those option type plays that I do share once again over at the Discord. That coursework, guys, same code word, Doctor, DOCTOR, gonna save you massively on those courses. And if you bundle the courses, you save a ton more. The value, like I said, it's there. Otherwise, I wouldn't be talking about it here with you. So I do want to keep stressing that we could fill that gap, especially if we have news that the market doesn't like. We're gonna fill that gap. The next big opportunity to me is the 200-day for the Qs, for the SPY, maybe the 50-day that we have for IWM. It really depends on what we see from that. If instead we break above resistance, then it's the all-time highs that we have in sight. And sitting on top of that resistance then sets up those next long trades, in my opinion, at least for right now, and at least for myself, because I can't speak for you. You guys got to do your research, due diligence, look around, see what other content creators are saying, see if they agree with the things that I say, and also read, learn, all that kind of stuff. I say learning is earning when I end my videos. And even when you look at the Discord, there's a learner tier and an earner tier. Earner tier gets you unrestricted access. And I'll tell you what, like for me, having my doctorate in education, having my master's degree in instructional technology, and I also am my 17 years in education myself, teaching math, got a passion for finance, putting it all together really has helped out me and my family. And I'm just trying to pay it forward to allow you guys the opportunity to do the same thing. I will say, if we sit on top resistance instead, turn it into support, then I'm looking to those all-time highs. That's currently what I have for you guys. Thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.